Hello there. This is Tejas and welcome to Trendline's interesting technical trends in the stock markets this week. In this video, we'll be covering the technical trends of Nifty 50 and Nifty Bank with the help of a parameter called open interest from the option chain data. So with using this data, we'll be able to plot support and resistance and also come up with a trading range, probable trading range for these two indices. So before we get into the analysis of open interest, let's have a quick overview on what options are first. So options are of two types: call options, which gives the option buyer the right to buy an underlying asset at a particular point of time in the future, called as the expiry date, at a particular price, which is called as the strike price. And the put option gives the option buyer the right to sell an underlying asset at a strike price on the expiry day. So let's understand this better with the help of an example. So let's say you buy a call option at a strike price of 110 rupees and the stock is trading at 120 rupees at expiry. So now you can buy the stock at 110 rupees, meaning you get a profit of 10 rupees. But you also paid 5 rupees in the beginning to buy the option, which is called the premium. So you're left with 5 rupees. And looking this at a seller's point of view, if you sell a call option at 105 rupees strike price and the stock ends up at 100 rupees at expiry, this means that the options will expire worthless and you'll be able to pocket the premium that you received in the beginning. And to understand the put options, you can think of it like buying an insurance. So if you buy a put option at 90 rupees, and even if the price falls to 80 rupees at the expiry date, you can sell the stock at 90 rupees, which gives you a profit of 10 rupees, but you also paid 5 rupees as a premium in the beginning, leaving you with 5 rupees profit. But if you sell the option at 90 rupees and the price of the stock at expiry remained at 100 rupees, then the options will expire worthless and you'll be able to pocket the premium that you received when you sold the put option. So now let's look at the option chain for the 28th April expiry that I sourced from trendline.com in the option screeners. Now the most important thing here is that we'll talk about here is the OI and percentage OI. So the OI, which is the open interest, gives you the total number of contracts that are currently open in the market, so that have not been settled by the traders. And the percentage OI gives you the amount of change that the OI changed for a particular period of time. Now let's look at this graph, which is the OI change, which is the open interest change versus the strike price. So now we are seeing a lot of red candles here. So the red candles here means, which is the call OI change, means that there are lots of calls sold at this particular level. So for example, here at the 17,100 levels, there are a lot of call options sold here. So what the traders are thinking here is that the Nifty 50 is not going to breach the 17,100 mark, and thus they can pocket the premiums that they receive. And so this particular level will act as a resistance for a short period of time for the Nifty 50. And the green bars here indicate the number of the put OI change, and this basically acts as a support because the traders believe that the Nifty 50 is not going to breach this particular point to the downside, and thus they can pocket the premium that they sold. So high number of calls sold indicates a bearish nature to the market, and the high number of puts sold indicates a bullish nature to the markets. So on April 26th, we can see the Nifty 50 increased by about 1.46%, and it is reflected here in the graph as well. So the green bars here towards the left side of the chart indicates the number of puts sold. So the put sold here offered a lot of support for the Nifty 50, which eventually went forward and increased by 1.46%. Now we can look at the absolute open interest data for the April expiry on 27th April Wednesday. Now let's have a look at the PCR first towards the bottom right of the slide, which is the put to call ratio. So the put to call ratio is 0.8, meaning the number of calls sold here is greater than the number of puts sold. This indicates a very slight bearish tone in the markets, and you can also see that the red bars here are dominating the chart here, offering a lot of resistance for the Nifty 50. And there is a high support, comparatively high support at 17,000 marks as well. But if you look at the 26th May expiry option chain, there is a very strong resistance at 17,000 level, and the put to call ratio here at the bottom right of the screen is 1.9. So this means that almost twice the number of puts were sold when compared to the total number of calls, which indicates a very bullish nature for the stock market for Nifty 50. However, we also need to look at the major constituents of Nifty 50, which drives the index. For example, Reliance, HDFC Bank, HDFC, and Infosys, these four stocks alone constitute about 35%, more than 35% of the index. So we need to look at the option chain analysis for these stocks as well. So for Reliance and HDFC Bank, we can see that the PCR ratio is very low, around less than 0.5, indicating a very bearish tone. And we can also see that there is a very high resistance right above the spot price for both these stocks. And this trend continues in Infosys and HDFC as well. The put call ratio doesn't go more than 0.5. So all these four stocks are indicating a bearish sentiment in these four stocks. So even though the open interest analysis for the next month's expiry is showing a very bullish trend, we have to incorporate the bearish trend that are being shown by the heavyweight stocks when we constructed probable trading range for Nifty 50. So here, to start off with, there is a very strong resistance at 18,000 levels, and there is a very strong support at 16,000 levels as well. So there is a relatively stronger support at the price that the Nifty 50 is currently trading at. But however, this is offset by the bearish tone by the four major stocks that constitutes more than 35% of the Nifty 50. So to end up with, we'll be ending up with the probable range of about 16,500 to 17,500 for Nifty 50. Now let's move on to the Nifty Bank analysis for the open interest chain option chain. So on 27th April, Wednesday, there was a higher number of calls sold. As you can see, there is a very long red bar right below the spot price of the Bank Nifty. And towards the right side, you can also see there is a green bar which is inverted. This means that the put sellers actually covered their positions, and thus the put OI decreased a lot, and the call OI change is higher than the put OI change, meaning that there is a very slight bearish tone for the Nifty Bank in the short term. And when we look at the absolute OI for Nifty Bank for the 28th April expiry, the put to call ratio is 0.7 and again showing a slight bearish tone. There is a very high resistance at 36,500, but there is also a relatively stronger resistance right below spot price of the Bank Nifty. And the PCR is 0.7, which is not a lot, doesn't indicate a lot of bearishness, but certainly a slight one. And if you look at the next month's expiry, we can see that the PCR ratio is 1.0. This shows that the traders are indecisive and doesn't know where exactly the Nifty Bank is going to go in the next month, as there is an equal number of put OI and call OI. So because of this, Nifty Bank's probable range will probably in the range of 35,500 to 36,500. And this is contingent on the fact that the heavyweight constituents of the Nifty Bank, such as ICICI Bank, Kotak Mahindra Bank, and also HDFC Bank, doesn't really have big price swings. If there is a big price swing, then it will definitely catch up to the Nifty Bank as well and might breach these supports and resistance. So to sum it up, so we found out the support and resistance zones, probable support and resistance zones for Nifty 50 at 16,500 to 17,500, and for the Nifty Bank at around 35,000 to 37,000 with the help of open interest analysis through the option chain data. So these were the interesting technical trends in the stock markets this week. This is Tejas signing off.